So let's talk about down payment assistance for a second. So most times when you call a lender and say, hey, can I get down payment assistance? They either sell away from the program, or they say the interest rates are too high, it's not as good as it used to be, or they don't have the program, or it's not worth it your while. At the end of the day, loan officers are based on loan amount and what the loan type is supposed to be. Now, key factor here, federal law was passed in 2008 that loan officers are not supposed to have proxies on their compensation based off loan type. So even though that's a federal law and even though that was passed, most mortgage bankers have found a way to get past the compliance side of it, and they do pay loan officers a different compensation on their loan type if it's down payment assistance. And unfortunately, down payment assistance pays the least amount of compensation to a loan officer. So when you hear all those reasons, there's a couple of things that are happening. One, maybe they're true in your particular case. Or two, maybe the loan officer is a really good salesperson and wants to get away from that program. But at the end of the day, if they're talking to you about all your options and other benefits sound better to you, well, you might pick that one instead. Here's the reality. You're not asking about down payment assistance because you have all the money. If you had $2 million in the bank, hell, you'd buy it cash. And that's what most people would do. But most people live paycheck to paycheck. And when you live paycheck to paycheck, you need that assistance. And it's still available. Now, here's the pros and cons to it. Pro, at the end of the day, down payment assistance does help with the down payment and closing costs. It doesn't get you to zero though. In some very rare cases it can, but most likely you're still going to need about $3,000 to $5,000 to close. Credit score wise, depending on the program you pick, you can need a minimum credit score of 600, 620, and all the way up to 680. The higher the credit score you have, the more closer to zero you're going to get to. Now, when it comes to getting to zero, how do people actually do that in those rare cases? Well, they have over a 680 FICO, and they get credits from the seller, where the seller agrees to pay some of the buyer's closing costs. Now, getting seller credits right now in this market's very, very hard. So understand that if you're going to go for this option, you need to look for the ugly duckling. What I mean by that is you want to pick the house that has good bones, but necessarily may not be the exact perfect house move-in ready. Keep in mind, you can do paint, you can do flooring. Those type of things are not that expensive in comparison when you can get them done for 10, 12 grand. I know it's a lot of money. Do it a year after you move in or 2 years after you move in. But if you try and go for a house right now that's in perfect shape, you're not going to get credits from the seller. All right, moving forward. With down payment assistance, you can get up to 3.5% of your loan amount towards your down payment and closing costs. If you have a good credit score of 680, you can actually get more. At the end of the day, you're going to need about at least $3,000, in some cases up to $8,000 to close, but usually the average is about $3,000 to $5,000 as far as funds needed from you. If you want to get more details, reach out to us at piflending.com. We're happy to get you a closing worksheet based off your scenario sent to you.